Accounting Officer Engagements. The first thing we're going to do today is audit and independent review requirements, specifically reference to Section 58, Big 2A of the Closed Corporations Act, with Section 30, Subsection 7 of the Companies Act and the Companies Regulations 28. Prior to the amendment of the Act in 2011 by the Companies Act, the Closed Corporation Act only required a closed corporation to prepare the annual financial statements and for the closed corporation to appoint an accounting officer. The accounting officer has certain duties in terms of Section 62 of the Act, which specifies that the accounting officer has to review the appropriateness of the accounting policies in the preparation of the annual financial statements. The amendment to the Act by the Companies Act has also amended the audit and independent review requirements. The independent review application, which we will start off with. The Closed Corporation Act has been amended in terms of Section 58, Big 2A, which states the following. Big 2A, Section 30, Subsection 2B, and 3 to 6 of the Companies Act, read with the changes required by the context, apply to closed corporation that is required in terms of the regulations made in terms of Section 30, Subsection 7 of the Companies Act to have its annual financial statements audited. The amendments to the Act therefore only state that the relevant sections in the Companies Act will apply to the closed corporation that require an audit. There are, however, currently two views on this issue as discussed below. View 1. The amendment of Section 58, Big 2A in the Act only states that the Companies Act is applicable to closed corporations that require an audit. Closed corporations are not incorporated in the independent review requirement. View 2. Section 32B, which has been included in the Act, states that a closed corporation can be audited or audited voluntarily or independently reviewed. The Companies Act has amended Section 58(2) of the Act to include Section 58 Big 2A, which includes the requirement for a closed corporation to be audited when they meet the requirements set out in Regulation 28 of the Companies Act regulations. The regulations provide that where the audit of any closed corporation is desirable in the public interest as indicated by the meeting of the prescribed criteria in any particular financial year, the annual financial statements of that closed corporation must be audited. If any of the following prescribed criteria are met, the closed corporation will require an audit. If in the ordinary course of its primary activities, a closed corporation holds assets in a fiduciary duty for persons who are not related to the closed corporation, and the aggregate value of such assets held at any time during the financial year exceeds 5 million rand. A closed corporation which was incorporated directly or indirectly by the state, an organ of state, a state-owned company, or international entity, a foreign entity or a foreign company, or primarily to perform a statutory or regulatory function in terms of any legislation, or to carry out a public function at the direct or indirect initiation or direction of an organ of the state, a state-owned company, an international entity or a foreign state entity, or for a purpose ancillary to any such function, any other closed corporation whose PR score in that financial year is 350 or more, or any other closed corporation whose PR score in that financial year is at least 100, but less than 350, and its annual financial statements for that year were internally compiled. For this category of closed corporation, the decision as to whether to compile the financial statements internally or independently will determine whether the closed corporation requires an audit. Closed corporations would need to consider the PR score and whether the annual financial statements were prepared internally or independently in deciding whether they require an audit or not. Public interest score, PIS greater or equal to 350, yes. PIS greater or equal to 100 but less than 350 and internally compiled, yes. PIS greater than 100, less than 350 and independently compiled, no. PIS less than 100, independently compiled, no. PIS less than 100 and AFS internally compiled, no audit. A closed corporation will also require the annual financial statements to be audited if the closed corporation holds assets in the ordinary course of its primary activities in a fiduciary capacity for people who are not related to the closed corporation, and the aggregate value of such assets held at any time during the financial year exceeds 5 million rand. The terms ordinary course of its primary activities and fiduciary capacity are not defined. Assets held in a fiduciary capacity must be held in the ordinary course of the closed corporation's primary business, not incidental thereto, on behalf of third parties not related to the closed corporation. Fiduciary capacity implies decision-making capability over the application of the assets, and that the third parties have the right to reclaim the assets. These assets may be financial or non-financial assets. Whether a closed corporation holds assets in the ordinary course of its primary activities depends on the nature of the closed corporation, i.e., whether the activity is part of the core business or is incidental thereto. Incidental activities will not be included in a closed corporation's primary activities. Conclusion. Each closed corporation must evaluate whether it is required to be audited for statutory purposes in terms of the requirements of the Act. Closed corporations should bear in mind that in a group situation where the closed corporation is the holding company, an audit of certain group companies such as significant subsidiaries or any subsidiaries as determined by the audit partner may be required for the auditor to be able to express an opinion on the consolidated financial statements, regardless of whether such an audit is also a statutory requirement in terms of the Act. The auditor must satisfy the requirement to comply with International Standard on Auditing 600 regarding group audits. Closed corporations should also evaluate whether their PR score could fluctuate above and below 350. If this is the case, closed corporations are divided to adopt a conservative approach and opt for an audit. Where a closed corporation requires an audit 1 year and an accounting officer's report the following year, it will impact the audit of opening balances. The situation might possibly require more audit work and may result in a modified audit opinion on opening balances if the opening balances cannot be substantiated. Exemption regarding audit and independent review. The Companies Act provides for an exemption with regard to audit and independent review. The exemption states 30 Big 2A, if with respect to any particular company, every person who is a holder of or has a beneficial interest in any securities issued by that company is also a director of the company is exempt from the requirements in this section to have its annual financial statements audited or independently reviewed. But this exemption does not apply to the company if it falls into a class that is required to have its annual financial statements audited in terms of the regulations contemplated in subsection 7A, and B, does not relieve the company of any requirement to have its financial statement audited or reviewed in terms of any other law or in terms of any other agreement to which the company is party. As company also includes a closed corporation, this implies that any closed corporation that meets the requirement to be audited in terms of the regulations, in terms of the PR score or activities it is engaged in would require an audit. Section 58 Big 2A states, Section 32B and 3 to 6 of the Companies Act, read with the changes required by the context, apply to a closed corporation that is required by the regulations made in terms of Section 30 subsection 7 of the Companies Act to have its annual financial statements audited. I interpret this to mean that the exemption in Section 30 Big 2A is not applicable to closed corporations, as Section 30 Big 2A is not applicable to closed corporations. Solvency and liquidity requirements. The Act requires that a closed corporation meet certain solvency and liquidity requirements when making certain payments. These payments include when a closed corporation acquires a member's interest, when a closed corporation provides financial assistance to a member to acquire an interest in the closed corporation, and when a closed corporation makes any payment to members by reason only of membership. In order to meet these solvency and liquidity requirements, the closed corporation's assets, fairly valued, must exceed all its liabilities after such payment is made. The closed corporation must be able to pay its debts as they become due in the ordinary course of its business, and such payments must not, in a particular circumstance, render the closed corporation unable to pay its debts as they become due. The accounting aspects of the Act. A closed corporation must keep in one of the official languages of the Republic such accounting records as are necessary to present the state of affairs and business of the closed corporations fairly and to explain the transactions and financial position of the business of the closed corporation. These accounting records include records showing the assets and liabilities, members' contribution, undrawn profits, revaluation of fixed assets, and amounts of loans to and from members, a register of fixed assets showing the respective dates of acquisition and the cost thereof, depreciation if any, the date and amount of any revaluations if applicable, the respective dates of any disposals and the consideration received in respect of these disposals. Records containing daily entries of all cash received and paid out in sufficient detail to enable the nature of the transactions and, except in the case of cash sales, the names of the parties to the transactions to be identified. Records of all goods purchased and sold on credit and services received and rendered on credit in sufficient detail to enable the nature of the goods and services and the parties to the transactions to be identified. Statements of the annual stock inventory taking and records to enable the value of stock at financial year end to be determined, and vouchers that support the entries in the accounting records. The accounting records relating to the following matters must contain sufficient detail of individual transactions to enable the nature and purpose of these transactions to be clearly identified. Contribution by members, loans to and from members, and payments to members. Records must be kept in such a manner as to provide adequate precautions against falsification and to facilitate the discovery of any falsification. Members are accountable if accounting records are not kept in a manner required by Section 56. Any closed corporation or member who fails to comply with Section 56 shall be guilty of an offence. In terms of Section 56 5b, if the members have assigned their responsibility with regard to the accounting records as provided for in Section 56, if the members to a competent and reliable person and are able to prove that they had reasonable grounds for believing and did believe that the persons charged with the duty was in a position to discharge that duty, and the members had no reason to believe that this person had failed to discharge that duty, the members are entitled to use this as a defense. Consequently, if an accounting officer is required to maintain the accounting records of a closed corporation, it becomes the responsibility of the accounting officer to ensure that the accounting records are maintained as provided for in Section 56. Annual financial statements and the impact of the amendments to the Companies Act. In assessing the reporting requirements of a closed corporation, and in particular the content and format of annual financial statements, it is necessary to refer to the amendments that the Company Act has made to the Act. Closed corporations and companies differ in many respects. In considering how these differences affect the objectives of the financial statements, attention is to be given to the relationship that exists between the owners and the management of the business. The Companies Act envisages that owners and management are possibly separate and distinct groups of people, whereas the pervasive concept of the Closed Corporations Act is that owners and management will normally be the same group of people. Section 46 also refers to the fact that unless otherwise provided, every member shall be entitled to participate in the carrying on of the business, and members shall have equal rights in regard to the management of the business. In general, as a consequence of the above differences, the concept of stewardship and its associated reporting function are less relevant to the annual financial statements of a closed corporation. Since owners and management in a closed corporation are presumed to be the same group of people, the AFS of a closed corporation should, as a primary objective, fully meet the needs of members, both as owners and as concerned management. The annual financial statements may be as simple and concise as is consistent with fair presentation, but may also be require detailed analysis of as much financial information as the members consider necessary for managing the affairs of the closed corporation efficiently. The Act does not prohibit closed corporations in which some members are separate from the operations of the closed corporation. Provision is made in the Act for the internal relationship among members to be determined and recorded in an association agreement. However, because of the fiduciary position of members and the liability of members for negligence, the needs of all members, whether or not actively involved in the management of the closed corporation, should be considered in the preparation of financial statements. The Act stipulates that members of a closed corporation must, within a maximum period of 6 months after the year end, cause financial statements to be made out. This is an amendment as a result of the Companies Act 2008, as the Act previously required AFS to be completed within 9 months. For AFS to be of benefit to members, they are to be produced on a timely basis as to facilitate proper decision making. In addition, timely information is needed for determining whether the solvency and liquidity requirements of the Act are met before certain payments are made to members. The Act requires annual financial statements of a closed corporation shall, in conformity with generally accepted accounting practice appropriate to the business of the closed corporation, fairly present the state of affairs of the closed corporation. It is the responsibility of the members to ensure that the annual financial statements are in conformity with the required financial reporting standards, appropriate to the business of the closed corporation, and fairly present the state of affairs of the closed corporation as at the end of the financial year concerned and the results of operations for that year. The Companies Act has also included the additional requirement of certain closed corporations to compile their annual financial statements using IFRS or IFRS for SMEs. It is the responsibility of the members to ensure that the annual financial statements are in conformity with these financial reporting standards appropriate to the business of the closed corporation and fairly present the state of affairs of the closed corporation as at the end of the financial year and the results of operations for that year. In determining what generally accepted accounting practice appropriate to the business of the closed corporation is, the preparer of the AFS is to have regard for the needs of the members. It is again stressed that the primary users of the AFS of a closed corporation will be the members themselves. The AFS will be used to assist them not only in determining compliance with any statutory provisions, but also in managing, controlling, and developing the business. The Act states that the annual financial statements must consist of a balance sheet, statement of financial position and notes thereon, an income statement, a statement of comprehensive income, or any similar financial statement where such a form is appropriate, and any notes thereon, a report of the accounting officer. Section 58(2)(d) requires that the annual financial statements must be in agreement with the accounting records, which must be summarized in such a form that the accounting officer is able to report to the closed corporation in terms of Section 62(1)(c), without it being necessary to refer to any subsidiary accounting records and vouchers that support the entries in the accounting records. However, Section 58(2)(d) contains a provision that nothing contained in this subsection is to be construed as preventing the accounting officer, if he or she determines it necessary, from inspecting such subsidiary accounting records and vouchers. The annual financial statements must be approved and signed by or on behalf of a member that holds a member's interest of at least 51% of the members, together that hold a member's interest of at least 51% in the closed corporation. The Companies Act has amended the Act by the inclusion of the following sections which affect the annual financial statements and the audits of a closed corporation's financial statements. The Act also states that where applicable, the reference to a company should be replaced with reference to a closed corporation. Section 10, which states the following: regulations made by the Minister in terms of Section 29(4), 5 and 30 subsection 7 of the Companies Act apply to a closed corporation as if those regulations had been made in terms of this Act. But any reference in those regulations to a company must be read as a reference to a closed corporation. Section 58 Big 2A, which states the following: Big 2A, Section 30, subsection 2B and 3 to 6 of the Companies Act, read with changes required by the context, apply to a closed corporation that is required in terms of the regulations made in terms of Section 30, subsection 7 of the Companies Act to have its annual financial statements audited. Closed corporations and companies therefore now have similar requirements relating to the requirement to compile annual financial statements using a prescribed framework. as set out in Section 30, subsection 7 of the Companies Act, read with Company Regulation 27, and to provide audited financial statements where required. The Act does not explicitly require the inclusion of a statement of changes in equity, statement of cash flows, accounting policies, and notes as part of the AFS. The impact of the aforementioned Section 10 of the Act is that Companies Regulation 27 applies to closed corporations. Closed corporations that are required to use IFRS and IFRS for SMEs to prepare their AFS will have to include a statement of changes in equity, a statement of cash flows, accounting policies, and notes as required by IFRS and IFRS for SMEs. The Act contains no explicit requirement to provide comparative information. However, comparative information assists members in understanding performance trends. In addition, if you use IFRS or IFRS for SMEs, there's no doubt you will require comparative information. In Section 58 of the Act, certain requirements with regard to the financial statements are outlined. With the amendment of the Act by certain Companies Act inclusions, both Acts will have to be adhered to simultaneously. Section 5.4 of the Companies Act states that if there is an inconsistency between the Act and the provisions of any other national legislation, both Acts shall apply concurrently to the extent that it is possible to apply and comply with one of the inconsistent provisions without contravening the second. To the extent that it is impossible to apply or comply with one inconsistent provision without contravening the second, the Companies Act shall prevail with the following exceptions: the Auditing Professions Act, Labour Relations Act, Promotion of Access to Information Act, Promotions of Administrative Justice Act, Public Finance Management Act, Banks Act, Local Government Municipal Finance Management Act, and Section 8 of the National Payment Systems Act. These acts override, for all intents and purposes, the Companies Act. The sections included by the Companies Act in certain cases seem to create conflict with the requirements for a closed corporation. The Act requires a closed corporation to compile a balance sheet and income statement. The names of these statements have since been amended in the financial reporting frameworks, and in some cases, where applicable, the closed corporation needs to use the financial reporting frameworks as required by the Companies Act. It is therefore assumed that the use of this framework meets the Act's requirements. The Act, meaning the Closed Corporations Act, also refers to the fact that a closed corporation must compile financial statements using generally accepted accounting practice that is appropriate to the business. Where a closed corporation is required to compile financial statements using the prescribed framework, the additional requirements as stated in the Closed Corporations Act can be included. It is my assumption that unless there is specific conflict where one Act overrides another, closed corporations should strive to meet the requirements of the Act and the Companies Act where applicable. Section 32, subsection 2b of the Companies Act, read with Section 58, Big 2a of the Closed Corporations Act, states that a closed corporation will require an audit if the closed corporation meets the public interest score as defined in Regulation 28 of the Companies Act, or if the closed corporation keeps assets of more than 5 million rand per month in the ordinary course, not per month, per annum, in the ordinary course of business, and a fiduciary capacity or a closed corporation can be voluntarily audited. With regard to the AFS being independently reviewed, I am of the view that the requirement for an independent review is not applicable to closed corporations. I need to repeat that. With regard to the AFS being independently reviewed, I am of the view that the requirement for an independent review is not applicable to closed corporations, whether owner-managed or non-owner managed. Internally or independently compiled financial statements. In deciding on the appropriate financial reporting framework to be used, the closed corporation needs to identify whether its financial statements were compiled internally or independently. Regulation 27 states that the financial statements may be compiled internally or independently. AFS will be considered to be compiled internally unless they have been independently compiled and reported. So the definition of internally compiled, there is no definition. You first define independently compiled and reported, and if it's not that, then it's internally compiled. What does independently compiled and reported means? They are prepared by an independent accounting professional. They are prepared on the basis of financial records provided by the close corporation. They are compiled in accordance with any relevant financial reporting standards. Ladies and gentlemen, do you see the requirement for a compilation report? No, you don't, so there does not have to be one. The default position is that annual financial statements are internally compiled unless it is asserted that they are independently compiled and reported in accordance with any relevant financial reporting standards. The preparation and compilation of financial statements using the close corporation's own financial reporting framework, which must meet the requirement of sections 56 and 58, will still require the preparation of the income statement, balance sheet, and cash flow statement and notes. The financial records used for this process include ledgers, journal documents, and trial balance. The preparation and compilation of financial statements where IFRS and IFRS for SMEs is still the applicable reporting framework include the preparation of a statement of comprehensive income, statement of financial position, and statement of changes in equity, statement of cash flows, accounting policies, and notes. The new terminology may be replaced by the terms income statement, balance sheet, and cash flow statement where applicable. The distinction between independent and internal compilation may not always be clear. What would be the case, for example, where a person or entity was employed to prepare the financial accounting records and then prepare the financial statements? Close corporations would have to evaluate whether the three requirements for financial statements to be compiled independently were met, and if not, then the financial statements could not be considered to have been independently compiled. The close corporation must ensure that an appropriately qualified person is appointed to act as the independent accounting professional where required. For the financial statements to be compiled independently, the close corporation will require an independent accounting professional to compile the statements. If the close corporation does not have the financial statements independently compiled and reported on, the financial statements can be compiled by any suitably qualified person. Closed corporations that choose to be audited by the alternative provisions in the Act include a member's decision, would not have to comply with the Act's independent requirements, but the auditor would have to apply the rules regarding improper conduct and the Code of Professional Conduct for registered auditors. The public interest score. The regulations state that every closed corporation shall calculate its public interest score at the end of the year, not any other time, at the end of the year. Closed corporations should ensure that where they foresee that the PR score for the following year will be above the threshold for an audit to be required, they should prepare for an audit for the following year. The PR score is calculated as the sum of the following: a number of points equal to the average number of employees of the closed corporation during the financial year. 1 point for every 1 million rand or portion thereof in third-party liabilities of the closed corporations at the financial year end. 1 point for every 1 million rand in turnover of the closed corporation during the financial year, and 1 point for every individual who at the end of the financial year is known by the closed corporation to directly or indirectly have beneficial interest in the closed corporation. Employees. When performing the calculation, employee has the meaning set out in the Labour Relations Act. In this Act, an employee is defined as any person, excluding an independent contractor, who works for another person or for the state, and who receives or is entitled to receive any remuneration, and any other person who in any other manner assists in carrying out or carrying on or conducting the business of an employee, and employed and employment have meanings corresponding to that of the employee. The additional guidance is provided in Section 200 Big A of the Labour Relations Act 1995. Until the contrary is proved, a person who works for or renders services to any other person is presumed, regardless of the form of contract, to be an employee if any one or more of the following factors are present: the manner in which the person works is subject to the control or direction of another person. The person's hours of work are subject to the control or direction of another person. In the case of a person who works for an organization, the person forms part of that organization. The person has worked for that other person for an average of at least 40 hours per month over the last 3 months. The person is economically dependent on the other person for whom he or she renders the services. The person is provided with the tools of trade or work equipment by the other person, or the last one, the person only works for or renders services to that one person. When calculating the number of employees, care should be given to the various definitions in the Labour Relations Act, and based on the various contracts of the employees and the interpretation of the definitions, the decision must be taken when to include the employees in the calculation. Third-party liabilities. Third-party liabilities is not defined in the Act. These liabilities are viewed as all liabilities of a close corporation that are payable to an identifiable third party. The following practical issues need to be considered. Items should meet the definition of liability and involve a third party. All liabilities, including subordinated loans from members, are seen to be with a directly related party of the close corporation and should be excluded from the PR score calculation. Provisions recognized in terms of the prescribed financial reporting standard should be included only if it is reasonably deemed to be payable and the third party can clearly be identified. For example, deferred tax would be excluded. When calculating the PR score, only the closed corporation itself should be considered and not the group. Therefore, any loans from other companies, closed corporations within a group should be included in the calculation. However, loans not provided on normal commercial terms should be excluded, as favorable terms would be deemed to compromise the third party. Status of the counterpart. Examples would include loans with no specific repayment, terms of interest that is charged at rates that are not market related. Please note the last one. It is crucial. Turnover. Turnover is not defined in Regulation 164.4 of the Companies Act regulations. Turnover is defined in terms of this regulation as what? At any particular point in time, the annual turnover of a company other than a holding company is the gross revenue of that company from income into or from the Republic, arising from the following transactions or events as recorded on the company's most recent annual financial statements: the sale of goods, the rendering of services, the use by other persons of the company's assets yielding interest, royalties, or dividends. Regulation 164.1 states, for the purposes of Section 175 of the Act, the assets and turnover of a company at any particular time must be calculated in accordance with, this is the crucial part, ladies and gentlemen, at the financial reporting standards applicable to that company, as set out in Regulation 27, or SA GAAP, which is no longer. While Regulation 164 defines the term turnover, it states that the definition only is provided for the purpose of the calculation of administration fines and not extended to the use of the calculation of the PR score. That is very important. The definition provided is, however, the same as the current definition for revenue in all the prescribed FRSs, whereas turnover is not defined by the FRSs. A general practice: turnover is determined as the revenue generated from the primary activities of the company. The meaning of beneficial interest. For the purposes of this calculation, beneficial interest is defined as follows. When used in relation to a company's securities, means the right or entitlement of a person through ownership, agreement, relationship, or otherwise, alone or together with another person, receive or participate in any distribution in respect of the company's securities, exercise or cause to be exercised in the ordinary course of business any or all of the rights attached to the company's securities, or dispose or direct the disposition of the company's securities or any part of the distribution in respect of the securities, but does not include any interest held by a person in a unit trust, collective investment scheme in terms of the Collective Investment Scheme Act. A person is also regarded as having a beneficial interest in a security if the security is held by a nominee officie, by any other party on that first person's behalf, As Regulation 26 requires 1 point to be allocated to each individual known to the company with a direct or indirect beneficial interest, another practical issue has developed. The reference to indirect beneficial interest could imply that a subsidiary of a holding company could be required to include the individuals with a beneficial interest in the holding company in its public interest score, as these individuals could be seen as having an indirect interest through its shareholdings in the subsidiary. I am of the view is that shareholders of a holding company does not or do not have the right or entitlement to distributions of the subsidiary, dispose or directly dispose of the securities of the subsidiary, or direct the voting in respect of, and therefore they are not seen as having a beneficial interest and should therefore, and I say it again, and therefore should be excluded from the calculation of the public interest score. With regard to calculating the beneficial interest in a company, and therefore in a closed corporation, whose securities are held by a trust, the SIPC has expressed the view in a non-binding opinion dated 30 June 2011 that the individual beneficiary of the trust should be counted as the individual beneficial interest holders. Conclusion. Regulation 26 requires every closed corporation to calculate a public interest score at the end of each financial year. This could, however, cause a practical problem for the audit process applicable to the closed corporation. If a closed corporation is required to be audited in terms of the PR score at the end of the financial year, certain procedures, such as an inventory count that should have been conducted on the last day of the financial year, would not have been performed. The closed corporation PR score will be used to determine whether or not the financial statements should be audited, as well as which financial reporting standard should be applied. The requirement is effectively applied retrospectively to the year for which the PR score is calculated, which has severe repercussions on the audit. It is thus recommended, ladies and gentlemen, that a cautious approach be used, in which the last financial statements produced are used as a basis for estimating the PR score, and material changes to the business are used to adjust this estimate to allow for an orderly audit should likely to be required. Financial reporting framework. On completion of the PR score calculation and the decision on whether the AFS were prepared internally or independently, the closed corporation needs to identify the financial reporting framework that it should use. Regulation 27 prescribes the financial reporting framework to be used by a closed corporation. The regulations make provision for IFRS for SMEs and SA GAAP, and also state that the FRS is applied to every closed corporation with a financial year end starting on or after the effective date of the Act. This means that the closed corporation with a financial year starting on or after 1 May 2011 year ends on or after the 30th of April 2012 will have to prepare financial statements in line with the following table. If your public interest score is greater or equal to 350, IFRS for SMEs or IFRS. If your PR score is greater or equal to 100 and less than 350, and your AFS were internally compiled, IFRS for SMEs or SA GAAP. Please note, SA GAAP is no longer. The PR score greater or equal to 100 and less than 350, and the AFS were independently compiled, IFRS for SMEs. PR score less than 100 and AFS were independently compiled, IFRS for SMEs, SA GAAP. PRS score less than 100 and AFS were internally compiled. Financial reporting standards is determined by the company for as long as no financial reporting standards are prescribed. Therefore, closed corporations that have a PR score of below 100 and that compile their own AFS internally can choose their own reporting standard, provided that it does fairly present the financial position of the closed corporation. All other closed corporations have to use IFRS or IFRS for SMEs. Although the regulation allows for the use of SA GAAP has been withdrawn with effect for year ends commencing on or after the 1st of December 2012. IFRS for SMEs may only be used by entities that fall within the scope of that reporting framework. Disclosure. Section 30 subsection 3 of the Companies Act states that the AFS of a closed corporation must include the following information: auditor's report if the statements were audited, director's report with regard to the state of business and profit or loss of the company. As a closed corporation does not have directors but rather members, it is assumed that a closed corporation will have to include a member's report. Section 58, Big 2A of the Act states that Section 30, subsection 2B and 3 to 6 of the Companies Act, read with the changes required by the context, apply to a closed corporation, and so forth. Section 30, subsection 3 to 6 of the Companies Act therefore applies only to closed corporations that are required to be audited, and a member's report will then only be required by a closed corporation required to be audited. The members' report is required to include a report by the members with effect to the state of affairs of the closed corporation and the business and profits of the closed corporation. In addition, if the closed corporation is part of a group, then any material matters or other prescribed information must be included. Members' remuneration. Financial statements that include the particulars in terms of remuneration and the amount of pensions paid or receivable by members or past members, if the closed corporation's financial statements require an audit in terms of the Companies Act requirements. Irrespective of this requirement, key management compensation should be disclosed if IFRS or IFRS for SMEs are complied with. The Companies Act requires that the financial statements of a closed corporation that are required to be audited in terms of the Companies Act must include the following: remuneration and benefits received by each member and the amount of any person paid, any pension paid, amount of any pensions paid by the closed corporation to or receivable by past or current members or individuals who hold or have held prescribed office in the closed corporation, and amount paid or payable by the closed corporation to a pension scheme with respect to past or current members or individuals who hold or have held prescribed office in the closed corporation. The definition of remuneration as per the Companies Act includes fees paid to members for services rendered by them to or on behalf of the closed corporation, expense allowances to the extent that the member is not required to account for the allowances, contributions paid under any pension scheme, the value of any option or right given directly or indirectly to a member, past members or future members, or a person related to any of them. Financial assistance to a member, past members or future members, or a person related to any of them for the subscription of a member's interest, and any loan or other financial assistance by the closed corporation to a member, past members or future members, a person related to any of them, or any loan made by a third party to any such person. Section 30 subsection 6 contains a detailed list of potential remuneration of directors and members. I am of the view, ladies and gentlemen, that is the intention of Section 30 subsection 6, that the payments and forms of reward to directors and members, prescribed officers, are to be disclosed on an individual basis, not in aggregate, as per the previous Act. Further, Section 5 of the Companies Act requires that any interpretation and any section of the Act must be applied in a manner that gives effect to the purposes referred to in Section 7. Section 7 sets out the purpose of the Act as the promotion in South African economy by encouraging transparency and high standards of corporate governance. The meaning of 30 subsection 5 and the reference to person require disclosure of the identity of the member, the name of the member. In Section 30 subsection 5 of the Act, requires that the disclosure must show the amount of any remuneration or benefits paid or receivable by person in respect of A, services rendered as a member of the closed corporation, or B, services rendered while being members of the closed corporation, as members of any other closed corporation within the same group of closed corporations, or otherwise in connection with the carrying on of the affairs of the closed corporation or any other closed corporation within the same group. The effect of these requirements is that all members' remuneration paid to or receivable by a member must be disclosed. Thus, not only the remuneration paid to the member by the closed corporation, but also all other remuneration received by the member from any other closed corporation within the group. One person's remuneration may have to be disclosed by more than one closed corporation in the same group of companies. The Act requires that the annual financial statements must disclose separately the aggregate amounts as at the end of the financial year of each of the following: contributions by members, undrawn profits, revaluation of fixed assets. Note that this is only applicable if the revaluation model in IFRS is applied and not IFRS for SMEs. However, ladies and gentlemen, please note this has been changed. The thing that IFRS for SMEs does not allow the revaluation from the 1st of January 2017, it now does allow it. Amounts of loans to members and amounts of loans from members. These amounts must be disclosed together with the movements in these amounts during the year. These are mandatory legislated requirements of the Act. There are no other specific disclosure requirements in the Act, which therefore places the onus on the members to ensure that the type and amount of detail disclosed in the annual financial statements are relevant and sufficient to achieve fair presentation. However, please note that where IFRS or IFRS for SMEs is applied, the relevant accounting framework, including the disclosure requirements, must be applied in full. Companies Act implications. The amendments to the Act by the Companies Act did not remove the requirement for a closed corporation to appoint an accounting officer. The requirement to appoint an accounting officer and the requirement for the accounting officer's report has not been removed. The Act still states that every closed corporation must appoint an accounting officer and compile an accounting officer's report, even if an audit is required. The audit requirement is in addition to the accounting officer's duties, which are included in the Act in Section 62. The Act requires that every closed corporation must appoint an accounting officer. The appointment of the first accounting officer will take effect on the date of registration of the closed corporation. If a vacancy occurs in the office of an accounting officer, the closed corporations must, within 28 days, appoint another accounting officer. The Companies Act has not removed the requirement for a closed corporation to have an accounting officer. This could therefore lead to the situation where a closed corporation could have an accounting officer as per the Act and an auditor if required in the Act per the amendments. The accounting officer and the auditor may be the same person, subject to the requirements of Section 90 of the Companies Act and the rules regarding improper conduct and the Code of Professional Conduct for registered auditors. Removal or resignation. A closed corporation is required to inform the accounting officer in writing of his removal from office. An accounting officer must inform every member of the closed corporation in writing of his resignation or removal from office. He must also send a copy of this letter to the address of the registered office of the closed corporation and inform the registrar by registered post. The letter is to contain the following information: the fact that he has resigned or has been removed from office, the date of his resignation or removal from office, the date up to which he has performed his duties, whether or not at this time the resignation or removal from his office he was aware of any matters in the financial affairs of the closed corporation which were in contravention of the Act. An accounting officer who is aware of any such matters must submit the full particulars to the registrar in writing. An accounting officer who feels that his removal was for improper reasons must inform the registrar by registered post and must also send a copy of the letter to every member. If the office of the accounting officer is vacant for a period of 6 months, the members who are aware of this vacancy become joint and severally liable for all the debts incurred by the closed corporation while the office was vacant. Qualifications. The Act also stipulates that no person qualifies for appointment as an accounting officer unless he is a member of a recognized profession. As a condition for membership, requires its members to pass examinations in accounting and related fields of study that, in the opinion of the Minister, would qualify its members to perform the duties of an accounting officer, has the disciplinary powers to exclude from members those people found guilty of negligence in the performance of their duties or conduct which is discreditable to the profession and has been named in a notice published in the Government Gazette. The Act states in Section 60, subsection 4, that a closed corporation may appoint the following as an accounting officer any person who is a member of a recognized profession listed in the Government Gazette, a firm as defined in the Public Accountants and Auditors Act, which is now the Auditing Professions Act, or any other firm if each partner is qualified to be so appointed, and any other close corporation if each member of the close corporation is qualified to be an accounting officer. For a firm to be appointed as an accounting officer, it must either be a common law partnership or a firm of accountants and or auditors as defined by the Public Accountants and Auditors Act, which is now the Auditing Professions Act. A firm may be appointed as an accounting officer of a close corporation provided that each partner in the firm is qualified to be so appointed. The Auditing Professions Act, the Public Accountants and Auditors Act has been replaced by the Auditing Professions Act. Firm means partnership, company or sole proprietor referred to in Section 40. A member or employee of a close corporation and a firm whose partner or employee is a member or employee of a close corporation may be appointed as accounting officer of that close corporation, provided that all members of the close corporation consent in writing to such an appointment. The intention of this requirement, ladies and gentlemen, is that the accounting officer should not have any interest in the close corporation or in the conduct of its business, which could jeopardize the independence and objectivity in discharging the duties of the accounting officer, unless all the members are aware of and accept this as fact. A firm can only include a company that is incorporated, in other words, a personal liability company as defined in the Companies Act, and the company must comply with the requirements of Section 39, subsection 3 of the APA. A personal liability company can therefore be appointed as an accounting officer if all the directors are qualified to act as accounting officers. A close corporation can be appointed as an accounting officer should all the members qualify to be appointed as accounting officers. Should all the members not qualify to be accounting officers, then a person should be appointed in his personal capacity. A sole proprietor that conducts his business under a business name, i.e. a name other than the name of his proprietor, therefore cannot be appointed as a firm, but will have to be appointed in his personal capacity. No requirements have been laid down by the Act as to the amount of the remuneration of the accounting officer. The matter must be agreed between the accounting officer and the members of the close corporation with reference to the relevant section of the Code. The SIPC requires the following in order to ensure that a firm or a close corporation qualifies for appointment as the accounting officer of a close corporation. The firm or close corporation to be appointed must furnish the following additional information in its letter of consent to its appointment: the names of all the partners of the firm or members of the close corporation, the recognized professions to which each partner or member belongs, the individual membership or practice number of each partner or member, and the practice number of the firm or close corporation allocated by the relevant recognized profession to the said firm or close corporation. Note, please, the membership or practice number of an individual partner or members will not be accepted, as the firm or close corporation will be appointed as the accounting officer and not the individuals. Prospective accounting officers must furthermore note that the letter of consent to their appointment must be typewritten on a letterhead containing the personal particulars of the accounting officer if the appointment is made in a personal capacity, on the letterhead of the firm if a firm is appointed, or on the official letterhead of the close corporation if a close corporation is appointed, and that it must be dated not earlier than 3 months prior to the date of lodgement. The duties of accounting officer. The duties of an accounting officer are set out in the Act. It is important that a distinction be drawn between the duties required of an auditor and those required of an accounting officer. All possible steps should be taken to ensure that this distinction is recognized not only by the accounting officer himself or herself, but also the members of the close corporation and possibly by other potential users of the close corporation's financial statement. The duties of the accounting officer are set out in Section 62 of the Act, and the Act gives the accounting officer a right of access to accounting records and other information of the close corporation, and entitles him or her to require necessary explanations from the members. The accounting officer is required to do the following: determine whether the AFS agree with the accounting records, Review the appropriateness of the accounting policies presented to the accounting officer as having been applied in the preparation of the annual financial statements. Report to the closed corporation in respect of paragraphs A and B. Where the accounting officer is a member or employee of the closed corporation, he must state this fact in the report. And the duties of Section 62, 1A, must be read subject to the limitations of Section 58, 2D. Section 58, 2D provides that the AFS are required to be in agreement with the accounting records, which must be summarized in such a form that the accounting officer is enabled to report the closed corporations in terms of Section 62, 1C without it being necessary to refer to any subsidiary accounting records and vouchers to support the entries in the accounting record. However, the accounting officer's right to inspect such a subsidiary accounting records and vouchers, if he deems it necessary, is not affected. During the performance of his or her duties, the accounting officer may become aware that a provision of the Act has been contravened. In this event, regardless of the materiality or significance, I'm going to repeat it, regardless of the materiality or significance of the contravention, he must describe the nature of such contravention in his or her report. Sometimes, the accounting officer may have reason to believe that there has been a contravention of the Act, but may have insufficient evidence to confirm the exact contravention. In such circumstances, the accounting officer is not required to extend his or her duties and search for the detailed evidence. Where uncertainty exists about a possible contravention of the Act, the accounting officer is to describe this uncertainty, the reason for the uncertainty, and the possible contravention of the Act in his or her report to the members. While there is no statutory obligation for a chartered accountant or associate general accountant or a SIPA member to act as an accounting officer to ensure that his or client enjoys the limited liability afforded by the Act, the matter may be discussed with the client, making the client aware that limited liability may be lost in specific circumstances. If the client agrees, the accounting officer can be engaged by the client to ensure compliance with the provisions of the Act. This additional service to be provided and the costs involved should be clarified in the engagement letter. Unless included in the engagement letter, the accounting officer's examination will not include the necessary steps to ensure continued limited liability by the client. If an accounting officer discovers a contravention of the Act while carrying out duties other than those duties required by the Act, the obligation to report, if any, would be governed by the terms of the contract in which he or she was appointed. In terms of such appointment, the accounting officer may be obliged, expressly or by implication, to report to members any contraventions of the Act of which he or she becomes aware. Reporting to the registrar. The accounting officer must immediately report to the registrar by registered post if during the performance of his duties he becomes aware of that the closed corporation is not carrying on business and has no intention of resuming operations in the foreseeable future, a change to the founding statement has not been registered, the AFS indicate that the liabilities of the closed corporation exceed its assets, or the annual financial statements incorrectly indicate the assets exceed its liabilities. The existence of a subordination agreement does not change the accounting officer's reporting responsibility. However, if the accounting officer finds that any subsequent AFS of the closed corporation concerned indicate that the situation has changed or has been rectified and that the assets concerned then exceeds the liability, or that they no longer incorrectly indicate that the assets exceed the liability, he may report to the registrar. The accounting officer compiles the financial statements. The duties of accounting officer to a closed corporation will often be carried out by a chartered accountant, associate general accountant, or a SIPA member, CYBA member, who has also been engaged to compile the AFS of the closed corporation. Compilation of the financial statements. Although there is no legislative requirement to use a specific standard when compiling financial statements, it is expected that any person doing such a job must use ISRS 4410 as revised, compilation engagements, which deals with the practitioner's responsibilities when engaged to assist with the preparation and presentation of historical information without obtaining any assurance on that information, and to report on the engagement in accordance with the standard. Referred to ISRS 4410.3, which provides guidance on the matters to consider in deciding whether a compilation engagement should be undertaken in accordance with the standard. Taking into account the capacity of any accounting officer which compiles the financial statements, whether and in what manner the practitioner's name is identified with the financial statements, and how users of the financial statements will understand the practitioner's involvement with those financial statements, it is expected to be extremely rare that a chartered accountant or any other accounting office in public practice conducts a compilation engagement without applying ISRS 4410. I just do not advise it. If applicable, the practitioner should document his or her decision not to undertake a particular compilation engagement if in terms of ISRS 4410. Compiling AFS of a closed corporation will normally provide a chartered accountant, SIPA member, or any other person who wants to be an accounting officer with most of the information that he or she needs to enable him to perform the duties of accounting officer to the closed corporation. He or she should ensure that the AFS has been approved and signed by or on behalf of a member or members holding an interest of at least 51% prior to the issuing of the financial statements. It is important that the accounting officer documents matters that are important in providing evidence that the engagement was carried out in accordance with the terms of the engagement, as well as his or her findings. Duties of accounting officer. Agree the trial balance at the end of the current financial year with the current year's financial statements. Note, where a trial balance was not prepared, the above step is omitted and the current year's AFS are agreed to the closing balances of the general ledger accounts. Where perpetual inventory records were not kept, and as a result no closing balance of inventory is reflected in the trial balance or in the general ledger, agree the summary of physical inventory counts at the end of the current financial year with the current year's financial statements. With reference to financial reporting standards considered to be appropriate to the business of a closed corporation and the requirements of the Act, consider the appropriateness of the accounting policies represented as having been applied in the preparation of the financial statements. Additional agreed upon procedures. The members of the closed corporation may require the accounting officer to perform procedures in addition to the above. Such procedures may include the following. Agree the opening balances of the general ledger accounts with the comparative financial information in the current year's AFS. Agree the trial balance at the end of the financial current year while closing with the closing balances in the general ledger accounts. Scrutinize income, expenditure, and asset accounts for correct allocation between capital and trading items. Check the correctness of the bank recon. Obtain a certificate of balance from the closed corporation's bankers in order to verify the balance per the recon, and to identify contingent liability securities provided and bank facilities. Scrutinize transactions after the financial year end in order to ascertain whether all accruals are recorded. Scrutinize income and expenditure accounts in order to ascertain whether there are any prepayments. Scrutinize depreciation calculations for the year end and verify that the rates and methods conform to the accounting policies in the notes to the financial statements. Agree the receivables and payables lists to the balance, trial balance, general ledger and control accounts, subsidiary accounting records and or vouchers. Check existence, ownership and valuation of inventory. Check or complete tax returns and accompanying schedules. Check that the income tax liability reflects in AFS agrees with the calculation of the tax return. Reconcile the turnover or revenue per the AFS to the closed corporation's VAT returns. Where the accounting officer is required to perform additional procedures, it is recommended that the reference is made to international standards or ISRS 4400. These are the agreed upon procedure standard, should be included in the engagement letter, and separate section on factual findings should be included in the accounting officer's report to the members of the closed corporation. Based on the outcome of the procedures, consider whether or not it is necessary to inspect any of the subsidiary accounting records and vouchers to enable you to comply with your duties as an accounting officer. If considered necessary, perform and document such procedure and their outcome. Include in your reports to the members on the AFS any contraventions of the Act that you become aware of during the performance of your duties as an accounting officer. Consider whether any partner or employee of your firm is a member or employee of the closed corporation and report accordingly to the members in your report on the AFS. Consider whether or not the closed corporation is carrying on business or is an operation, and where it is not carrying on business or is not in operation, consider whether or not it has the intention of resuming in the foreseeable future. If not, report accordingly to the registrar. Consider any of the following that you become aware of during the performance of your duties as an accounting officer. Any change during the financial year in respect of any particulars mentioned in the filing statement that has not been prepared, refer to CK1 or the last CK1. The AFS indicate that, as at the end of the financial year, the closed corporation's liabilities exceed its assets. The AFS incorrectly indicate that, as at the end of the financial year, the assets of the closed corporation exceed its liabilities. Report the above accordingly to the registrar.